Hello traders, this is Rich Derrick from Tradesight. What we're going to do right now is we're going to have a little talk about the upcoming market session that's going to be for Wednesday, January 23rd. We had a session that was marked by kind of a bifurcation for most of the session. The NQs were fairly weak for most of the trading day, and really only came on in the end of the day to get even near what the relative performance of the S&P was. The S&P futures, the ES minis, closed up on the day about 10 handles, and the NQs managed to close pretty much at the high of the day, up 17. But again, that was really recouping some pretty decent losses in the NASDAQ side throughout most of the session. The commodities, for the most part, were fairly flat on the day. Oil was a little bit higher, but didn't really do all that much, and gold and silver were fairly muted as well. The big news was the reversal in the yen. As far as the global stuff goes, the yen really had a very strong day where they finally kind of reversed what had been going on with the weakening of the yen, and we'll get to that chart in just a little bit. So let's take a look now at the ES and the NQ futures. So here are the NQ futures in the daily time frame. You can see today's candle spent a fair amount of time here below the 10 EMA, which would have been a real problem if we'd settled below it. We really hadn't had a good settlement below it throughout this whole range that we've been working in. But they recouped that. They were able to close above the open and even make a new high close on the move. So this is a pretty strong session for NASDAQ after recouping what could have been a fairly weak day. As far as the levels go in the near term here, we're pulling up above this 6/8 level. Next level is going to be 27.73, which is going to be the 7/8 level, and which is also this prior high right here from later on in October. So that's going to be the next level to keep kind of on the radar on the upside here. Now here are the ES futures, which had relative strength throughout most of the day, and really were kind of really driving the train. The pattern now has a better upside bias. We had some range expansion here to the upside, getting some better distance above this prior high. We've settled above the 7/8 level for the first time of this move. The CCI, as you can see, is not overly cooked yet by any means, and the next level for the market to take a look at, it's going to be this 1500 area. If they can get there, that's going to be that very strong and important 8/8 level on the Murray math box. So range expansion to the upside, kind of starting to accelerate this trend to the upside here. 8/8 level at 1500 is next. Now looking at the multi-sector chart, we see some pretty good strength here in the BTK and the BKX. They've been both the leaders for their respective markets. The semiconductors, again, still lagging and still kind of dragging. We saw a bump up and a little curl up here in the XAU. It's been basing in this area and is starting to move back towards the midpoint of this range. Something we'll talk about in a moment. But decent strength across the board today. Not great by any stretch of the imagination because we didn't have any participation from the semiconductors in this current session, but definitely something that the market could build on if it wants to make a push towards that 1500 area. Here's the put-call ratio, which remains fairly neutral. Did move up a little bit today, but nothing climactic and nothing that would imply that we need to be on guard for a reversal. Here's our 10-day trend. The 10-day trend still remains between the overbought and oversold threshold, so there's still plenty of gas in the tank for a push-up a little bit higher here. We're still well above the 0.85 overbought threshold, so we've got plenty of room there if the market wants to use that and push things up a little bit higher. Now, as far as the risk on and risk off metric that we use, that's the SPX TLT cross. We're still kind of holding here near the recent highs. Haven't broken out to new highs in favor of growth over the safety afforded by the TLTs. We still have a little bit more work to do there before we can break out. I just backed out to the weekly chart. In the weekly chart, you can see that there still is this key area right here that we really need to break above to kick in some some longer term rotation out of the bonds into the growth oriented SPX. So this is definitely going to be a level that we're going to be watching going forward. If we can break out above this after this nice little pattern in here, that could be very powerful for stocks to the upside. Now, one cause for concern for the market, though, unfortunately, it's never all good, right? The one cause for concern is the poor performance of the NDX versus the SPX. We made a new low on this chart. We talked about how the S&P was relatively strong all day, and Nasdaq kind of circled the wagons and recouped at the end of the day. But the fact of the matter is, we did print a new low on our cross chart here, the NDX divided by the SPX. So we still have relative weakness in the Nasdaq side versus the S&P, which will limit the upside to the S&P if the NDX can't get in gear and see some better things, see some better prices, see some better price action. So we're definitely going to keep an eye on this going forward. We have to see some good earnings out of Google. We have to see some good earnings out of Apple to really kind of change this a little bit and maybe really take the collar off of the S&P and let it do what it has the potential to do here. And finally, here's a look at the SOX versus the NDX. The SOX is trying to get in gear here and make a move. It's got this cupping action right here, but it hasn't really been able to clear this high. If we can clear this high on the closing basis and then follow through, this would be a good sign that we've got some better upside potential happening in the SOX and the NDX. What we have to do is better this 0.15 ratio. Once we do that, then the SOX will have some relative strength versus the NDX, and that would be very, very welcome and potentially change what we're seeing here in the NDX. Generally speaking, the SOX will lead the NDX. So if we get some good performance out of the semiconductors, then we can hopefully look for some better performance out of the NDX that'll kind of take the collar off this overall broad market rally. So this is definitely something we'll be watching going forward. Moving on to the individual sectors, today's top performer was actually the defensive XAU, kind of pivoting off of this little tiny range that had been in for the last couple of days. Did close above the 10 EMA today. Admittedly, it's very flat, but just note that the 50 and the 200 are very, very close at hand and not that far overhead. If we do in fact start to see a reversal in some of these currencies, this could be very, very interesting here. So keep an eye on this for the rest of the week here, the XAU. Now the BKX made a very very nominal new high in the move, but it is a new high nonetheless. Keep in mind that we are into the overbought territory. We pretty much closed right at the plus 1/8 level. This is going to be a fairly important level, but the 2/8 level right here at 54.69 is going to be much more important because that's going to be stiffer resistance if it can get there, and also will be the trigger for a frame shift to the upside if we get a close above that 2/8 level. That'll recalculate our Murray math levels to the upside here, which is always a bullish development. Here's a look at the oil services index, the OSX. This made a new high in the move here. It also made a new high close on this chart. Just came up a little bit short of this prior high here at about 242 3/4, but it's definitely within shooting distance. Also note here that we've got a fresh move to the upside here in the seeker count. We're now 7 days up in the seeker, so we definitely have a couple of more days here for the market to do something with if it wants to. This would be very positive for the market to see the oil services kick in at this point in the rally of the S&P. Now the BTK made a kind of another marginal new high on the move here, but again, we still have this exhaustion in place and haven't been able to flip to the downside here. So the warning is still in place, though the risk level has been violated, but it's real tight. So we'll have to see if we get a bang back down to the downside here. Plus 2/8 at 1687.50 is going to be next on the upside here. We have closed now 2 times above this plus 1/8 level. Here's the semiconductors that are just kind of resting here after this big range expansion last Thursday. Still inside that candle, so nothing new technically until we resolve this range and either break it to the upside or the downside. Keep in mind that we're right in the area of this 8/8 level, which is always really important. And of course, it was also the high here in September and also in August. Gold was fairly muted on the day. The gold futures really didn't do too much. We're still kind of trapped here between a couple of moving averages. Right now we're kind of pinned between the 10 and the 50. So if we can resolve this, we could have a little bit more to the upside. But just keep in mind that we're now 8 days up in the seeker setup, and this green line right here, which is the static trend line, is going to be some pretty stiff overhead if we do get a spurt tomorrow. So, this is going to be a little bit. This is a little bit late here, a little bit long in the tooth to go too much higher. But we'll have to see if we can pivot out of this area. We may need a little bit more lateral. This bar 8 doesn't have much expansion beyond 6 and 7, so it definitely is not going to be a stopper. If we do want to reach up to this static trend line, we just have to see what kind of range we get out of bar 9, and we won't know that until tomorrow. And here's a look at the Japanese yen. This definitely broke to the downside today. This is the Tradesight seeker on here right now. I just posted a video an hour ago talking about how this signal here in the seeker proved to be a little bit premature. Never qualified to the downside by closing below the 10 EMA and breaking below it. But there is a Comer sell setup in place right now. So we've got to keep an eye on that. The countdown's complete. We have our 13 exhaustion. Now we just have to get the confirmation of closing below the 10 EMA, which we did on Tuesday. We just have to see if we can penetrate that and make a print one tick or one pip rather lower than that low. So please see that earlier video if you want a little bit more detail on this. So that's it for today. As always, thank you for listening and stopping by. And this has been Rich Derrick from Tradesight. Good trading to you.